we have a very interesting little niche. I have financed 7,000 gastric bypass surgeries, maybe 8,000 now.
Wow.
Okay, in the last 7 years, 8 years. This is complete. Doesn't have anything to do with land, but it has to do with what's a bar. What makes a good bar and a bad bar?
Yeah. Welcome to today's episode. Today we have special guest Steve Hodgden. What part of the country are you from, Steve?
I'm in the San Francisco area right now. I live north of San Francisco in beautiful Marin County.
Awesome.
I'm originally from New Jersey.
Originally from New Jersey. How long did you live in New Jersey for?
I left when I was 20.
Oh yeah, never went back.
Yeah.
Only to visit.
I was there last week.
I know, but only to visit.
Yeah.
I think once you live in California, it's hard to go anywhere else to live.
Yep.
Yeah, it happens. California kind of ruins a lot of other things everywhere else. In New Jersey, it's funny. A couple of years ago, I had an opportunity to go to New Jersey for an event, and I literally, I got on the plane, and the organizer told me the event was canceled, and I'm like, "You can still come though," and I'm like, "No, I am going back off the plane. We're not going to New Jersey on accident."
Yeah. And I left with that rebellion kid thing, and 90% of New Jersey is beautiful. It's really pretty. It's way too expensive, but it's that little 20-mile circle around New York City that's just it's what it is. And so I was shopping real estate in upstate New York last week and a half ago, and I drove through parts of New Jersey where I camped at when I was a teenager, and I was like, there's nothing wrong with New Jersey. Yeah, it's a bad rap. So.
All right. Well, teach their own. Can you give people a brief description of who you are if they've never heard of you before, and then we can jump into this conversation?
My name's Steve Hodgden, and in this world, I operate. I'm a founder of a DBA called Finance Land Sales. The company I'm operating right now is Modern Asset Management, and we are a licensed lender in a couple of states. I come from the hard money collection world. I used to be owned accounts receivable firms for 20 plus years, and ventured into real estate investment starting in 1995 when I bought my first office building. So I've been dabbling around real estate for 30 years. Done fix and flips, ground up construction, lots of financing, second mortgages, on and on and on and on, and wound up coming into land 5 years ago, something like that, as I was pivoting my little business, and we were considering going full tilt into used car financing, and land was just really starting to take off then. And we figured that land was an appreciating asset, and a 10-year-old Honda was a depreciating asset. So we decided to lean into land. So.
Okay, awesome. I'm excited. I'm excited about this conversation. I have some questions about your experiences in credit and kind of why we're jumping into land in general as a whole, anyway. But were you doing a private credit, or is this like credit card credit, or what type of?
So again, all this what's left of my hair that's gray. I've done everything over the years. I've bought an awful lot of delinquent paper, credit cards, second mortgages, all that kind of stuff. I collected medical and government accounts, and my lending experience started in credit card and retail, and I developed a niche in subprime. So basically, my whole career has been where the banks don't play is where I've been.
So that's great. All the gray hairs then.
Yeah. I'm not afraid of somebody with a 550 FICO and there's and stuff, and stuff.
um, I have a lot of questions about this subprime credit borrower. So you've done a lot with 550 credit scores. Like, what's the a lot of people are scared of, like, 600 plus credit scores and all these people that have good income paying jobs. Why I know experience tells that, but why go into something that other people don't? And what's your recourse? And it really is under understanding the asset type and what you can actually collect on. Is that really your basis of that? uh your understanding that risk?
Yeah. So um, credit score is shorthand. It doesn't tell everything. It is an indicator. Oops, I
Well,
didn't
there
turn off my phone.
you go. This is an interesting
Right.
conversation.
All right. So um, that's a guy in a charity I'm trying to start. So the so credit score is an indicator. There's other ways. So um, for an example, um, we finance a lot of properties. A lot. We finance properties in the southeast.
Mhm.
The rural southeast. We're selling vacant land, in Tennessee and and western South Carolina and places that are not robust economies. Right? And so you'll have a borrower there who will have a 500 FICO because when they were 18, Citibank said, "Here, have a free $500 credit card." And they took that $500 credit card and they went and spent and bought $500 worth of stuff, maybe more. And then the bank said, "Pay us back." And they said, "Pay us back?" Right? So they started out in the hole. Because they started out in the hole and they're in a lower socioeconomic group, which is a nice way to say some things, they didn't get an opportunity to fix their credit.
Mm.
Right? Nobody will touch them. Right? I have financed. We have a very interesting little niche. I have financed 7,000 gastric bypass surgeries, maybe 8,000 now.
Wow.
Okay, in the last 7 years, 8 years. This is complete. Doesn't have anything to do with land, but it has to do with what's a bar. What makes a good borrower a bad borrower?
Yeah.
If you need a gastric bypass, you are probably not a great employee. You're probably sick a lot. Your expenses, everything's out of control, right? But when you have that surgery and a year later you're 100 pounds lighter, you're a better employee, you've got a better job, you're making more money, you're not eating at McDonald's 4 times a day, and your life has turned around. And you're deeply appreciative of the surgeon. So a much higher percentage of those people pay those bills than their credit score says.
Mm.
All right. I'll extrapolate that a little bit to land. Someone buying a piece of property is making an aspirational purchase. They're buying something for the future. So they may not pay their credit card bill right now, or their phone bill, or their rent right now, but they're going to hang on to this. But they're going to try to hang on to this property because we sold them that it's the American dream, that it's how they're going to build. It's an investment, all that. Right? So we a year ago, just a little over a year ago, I rolled in a Desert Square business into our platform. We've done a terrible job integrating, so I'm running two businesses that is selling like tax deed lots. We'll buy a tax deed lot for $1,000 and then sell it for 2,500 on, $100 a month payments.
Hmm.
Right? And why would you do that? Well, the return's fantastic. It's this great ROI percentage. Well, it's not much money. It's like, is it really worth doing this? So we've been bumping up our monthly payments, and there's a price point that people can afford, right? And if you know that, and you give them an affordable payment and an aspiration and a good deal, well, they're going to keep that.
Hmm.
They may not keep the Honda. They may give the Honda back, right? Right. But then maybe they'll keep the land. And if they want, and if you bought from me, if things have changed and you want to give it back, that's okay. No, that's okay. I may even give you a little money back. I may buy it back from you, depending on the situation.
I've heard a lot that these desert squares, especially seller finance, aren't really good paper, and is it because
Oh, they're terrible paper.
but you're still doing it.
But I absolutely abhor the no down, no credit check, $99 a month, whatever deals. The stuff that is taught by one of the particularly large schools,
Ah,
right? Right? That this is their model. And I can't say who these geeky people are, but they this is what they pitch. This is what they pitch is sell it on terms, you get a down payment, take it back, sell it again. That's what used car lots do,
yeah,
right? So I'm running in one kind of way. I'm running a used car lot, but I'm not that guy anymore. 30 years ago, I was banging people to collect bills. And 30 and well 40 years ago, 30 years ago, I changed, and things and life got better for everybody who owed me money, um, because I work with people, and if I sold you something for 199 a month and you're bouncing checks, I say, well, what can you afford? Well, I can give you 100. Okay, let's try 100 for a few months. I'm not going to go through a loan rewrite or any of that stuff because it's my own paper. I'm going to change your terms. You're still going to be past due, and we'll take payments for 3 months and then work with you. If you need to extend, we'll rewrite the note. Um, the the net, our experience, our net gross income is like 20-ish%, somewhere in there. So it's worth the effort. But when you do the ROI calculation, it says, oh, you're making 150%. Well, because you're not factoring in time, you're not factoring in loan
yeah,
servicing, you're not factoring in the people making phone calls, and we've got pretty big industrial size software. I'm not doing this in a little package. Um, and you get a text and a letter and phone calls, and we're on you every 2 weeks. What can we do? How can we help? But it is not a land investment business. You're building a subprime book. Yeah. And it's you go own a payday loan store. You know, that's you're in Southern California, right?
yeah,
Every 2 blocks there's somebody looking to do check cashing or payday loans or title loans, right?
yeah.
How do those people stay in business? Well, I did that for a bit too. You're when you can charge somebody 150% interest, you can take a lot of losses,
Hmm.
right?
I think it's interesting. I avoid the desert squares because in my thing I think I've learned this over the last couple of years, but you want to sell something of value that people want to pay back, and that's
Oh,
the
I'm absolutely with you. Like I told you, I hate this. I hate this. I bought 40. What did I buy? I bought 40 Mojave tax deeds this March.
you said 40 what?
40 Mojave County tax deeds this month.
Oh, okay.
We bought 40 properties at the auction. I think we were the largest buyer of tax deeds in Mojave County this year
Wow.
because I have a machine, and and this little machine is a couple of people, and this is her world, and it's okay, and we treat people ethically, and we are not here just for the down payment and flip the end of well, you say in the car business, flip the car every 3 months, right? That's loan. We are not in the loan to own business, although many people are. So therefore, our margins aren't quite as good, right?
Yeah.
But what I can do, and the theory, let's check in a year. Um, I sold you a $2,000 lot. You've made some payments. Can I come back to you and say, hey, is it time to buy some real estate? You've been paying me just fine. How about we move up from this $5,000 lot to a $20,000 lot? How about if we move up to something that you can put a house on? Or better yet, how about, would you like to buy one of the mobile homes that I just put on land in Golden Valley? I've got 2 manufactured homes projects working right now. So.
And upgrading their position, that works.
And I think there's an upsell. I think there's an upsell here. I know we have traded people, and we are not actively doing that. This is on my list over here on the right side. Let's talk this through. Let's market to our folks and see what happens. Would you like to trade? You buy a car, you trade in for a better car, right?
Interesting. I've never heard anybody trading up their debt. That's very interesting.
You were the 500 FICO guy a year ago. You've made 12 payments to me. I don't care what your credit score is now.
You've already shown yourself as a good borrower.
Yeah.
You want something better.
And that comes back to all those gastric bypass surgeries. I mean, we have tons of people that just walk away, right? But the percentage is way better than their credit score.
So what type of recourse in the gastric bypass surgeries? I've heard of people like financing like LASIK surgery and stuff like that.
Yeah, it's that work. There's no recourse. There's nothing to take back.
You can't have them sign a personal guarantee or anything like that.
Well, sure. Okay. Yeah. We're not here to sue people. We're not here to do wage garnishments. We're trying to become land investors, right? So I'm trying to leave. That's my old life. I used to do that.
You're not running a nonprofit though, so how do you balance that?
It works. If there's enough spread in the deal. So let's get out of the little stuff.
Sure.
If I bought a property for 20, and I'm going to sell it for 30, and I get 5 down. Now I've got 5 down. I've got $5,000 into a $25,000 note. Right? That's beautiful. It takes me a year to get whole. Okay. If I've got a 3-year note and a year to get whole, well, for every year of work, I've got 2 years free. And you snowball that up and up. I'd still rather buy and sell for cash.
Absolutely. But I think your expertise is definitely credit side. And I don't know if this is true, but is the medical side, are they upcharging the clients? That way you can get a better rate almost. That way you can get, I don't know how that works. It's intriguing to me. I've never heard the side.
All kinds of things are in there. It's the same. So I'm going to try to keep trying to keep us in what's currently going on land. Is you'll see people posting $299 a month for whatever months that adds up to $10,000, or cash discount today $6,500.
Mm-hmm.
Right, so 10,000 over time or 6,500, and they tell you the 10,000 is at 0 interest. Right, that really should be disclosed as an interest rate, because it is, right? But
yeah.
But because I say cash discount, then it's okay. But if I say, and I'm sorry, I'm going to get esoteric and get into fair debt collection and equal credit opportunity laws, and we don't want to do that. People in this business are misstating their structures.
Uh-huh.
You have to say discount. Simple as that. Say cash discount, and then you can, or terms, cash or terms, and you can do your 0 interest stuff if you want. Doesn't excite me. What's the incentive? What's the incentive for somebody to pay off early if there's no interest?
True, because it all goes to pay down. It all goes to principal.
So if I give you a 1 year same as cash deal, then I'll rebate and I'll rebate down and forgive the back end of the loan. Then everybody wins.
So what's a good structure? Because I've done a lot of seller financing. I still do it. What's the right way to do it if they're still seller financing some land? Because I've heard of the no interest rate thing, and you're 100% right. They should disclose the interest rate because they are paying for it in some way, shape, or form.
Mm-hmm. Mm-hmm.
But what's the correct way to kind of structure that?
Okay, so let's pretend we did the whole "I'm not a lawyer" disclaimer.
Oh yeah, absolutely.
Okay, don't hide anything.
Can you give an example? Can you give an example of the correct way?
Okay, so the correct way you should say is you should say the number of months, the interest rate, the amount financed, the total amount paid, and the monthly payments. Right?
Yeah.
There's five things in what's called the TILA, Truth in Lending box. Right? So you should. So magically, the interest rate box goes away.
Mm-hmm.
But the total of payments should be there, right? So you say it's $5,000 today or $6,000 over time. So that you're telling the consumer there's $1,000 extra here, right? And that's okay. That's okay. But what we've done is we'll say it's $5,000 today, $6,000 over payments, and I'll come back to you and say, if you can pay this off inside a year or 6 months, typically, you can pay this off in 6 months, we'll go back to the 5,000.
Mm-hmm. Because you're still realizing that gain a lot quicker.
Right. But I don't do that until after the transaction is done, because I want to come back and give you something, right? I want you to prove you're one of the good guys, and then I want to help you. I want to save you $500, and I want to put my money back to work faster.
No, that's good. I like that. I like that because it gives you a way to. You're almost like overperforming a performing note.
Mm-hmm. Yeah, that's right. That's exactly right.
That's good. I like
And
that.
when you run your numbers, you do your aggregated internal rate of return, kicking in a couple of things like that once in a while, yay, right? It offsets the person who's slow and you need to give them a lower payment so that they can get through whatever troubles they're getting through.
Mm.
The adage in houses is the inside of the house always looks like the mortgage payments.
Mm.
Right.
I like. Okay, let's talk about this. So everybody, I know a lot of people that do a lot of seller financing with houses and land, but they don't actually talk about that part of that is the depreciation side of it. The inside of the house, repairs, upkeep, the roof. A lot of people miss that, and they still think houses are a better investment for notes.
Well, if they've been, depending on how the note's structured, if they've been taking a depreciation on that property, why did the government give you a depreciation allowance? Why did they do that? So that you have some money to fix it up, right?
Yeah.
They didn't just magically give you money. Right? But yes, particularly new note investors, small note investors, think this $100,000 house is going to continue to be a $100,000 house. The argument for land is dirt's dirt. It's not going to change. Generally, it's not going to change. And I have had a handful of people in conversations say straight up in little RIA meetings, well, land always goes up. I don't know. In 2007 or 8, 9, you could buy New Mexico desert squares for $100. Right? There's a whole bunch of California east of you that was practically free, at one point. And land has had a remarkable inflation over the last several years.
Yeah.
Right? Not appreciation, inflation. Right? And it's made a lot of us think we were really smart.
That's for sure.
right? Especially all you young guys, right? All nobody, I, yeah, I had some horror stories going through the crash. I mean, I bought a vacation rental business in Palm Springs and watched 2/3 of the inventory either get short sold or foreclosed. And that just I had, and I didn't understand that I was in the biggest buying opportunity of my life. I had no idea. I was just thinking the world was coming to an end. I didn't know that $200,000 condo in Palm Springs that I could have bought for 75,000 would now be worth 400,000, right? In a decade, right? In 15 years. Yeah. So it's things are weird. Something's gonna happen, right? I think it's kind of happening. I think things. I stay away from the news as much as I can, but it's I'm talking to you from the downstairs family room in a house in Northern California that has a Zestimate of $1.2 million. This is a $500,000 house because that's what it was 10 years ago.
But Zillow says it's $1 million.
And what's the anecdote about the Zestimate?
It's not. It's just it's a an opinion of price and not what people are willing to pay for it or what the bank is willing to finance.
And Zillow was for a long time offering to buy your house for the Zestimate. They don't do that anymore.
No, they don't.
No, they don't.
We
And
saw.
and when you read the form, it says don't believe the Zestimate.
Yeah.
So but anyway, but yet we do.
So with all these experiences, you've seen a lot of the bad.
Yeah, and have committed a lot of mistakes.
So let's talk a little about mistakes and how people can avoid them, because I think the gray hairs are telling.
Yeah. So um, we've been running a virtual trading platform for 4+ years. Really hard at it for the last 3. Um, funded 600 I made some notes because I'm looking for I'm looking for people who need money. Uh, so we funded 600 deals for $20 million in that time. Um, and like I said, we sold 18 million. So I've got $2 million that anybody wants to. If anybody would like to buy 23 acres in New Albany, Indiana, it's a beautiful location right across the Ohio River from Louisville. Upscale, affluent homes, horse properties. It's so pretty. And as you come around this road called Floyd Knob, there's a guardrail, and a guardrail is to keep cars from going off the road, right?
Yeah.
And you go around, it's 23 acres. Go around, there's still some more guardrail. I own what's on the wrong side of the guardrail. Slope.
Oh no.
Slope. I bought this before understanding what slope was. I've held this property for 3 years. I went and stood on it. I tried to stand on it. I had to hang on to a tree.
Oh man.
Right? 23 acres straight down. Right? So what we've learned and are continuing to learn, you open up Land ID and you turn on the map. You did a fantastic video on this just a couple of weeks ago. Okay. Everybody out there, go watch that video. I can shut up right now. I don't need to tell you another thing. But what happens is when you're looking at the stuff on a computer all the time, and you see those 20-foot lines, they start to, you can't tell the difference what it looks like on 1 acre versus 5 acres versus 20 acres. It's only 20 feet. Well, 20 feet's a 2-story building. 20 feet is about the height of the house that I'm in. That's really high, right?
Mhm.
But I'm buying, I'm some, folks looking for money, um, are, are saying, well, there's a 20% of it's flat. You get a price report and it'll tell you what percentage of the property is what degree of slope, right? And they put it in 4 buckets, buildable, little buildable, not buildable, don't dare try. Um, but if you have a property that's like this, you could have 50% buildable on each side of the hill.
Yeah.
If you
But
have a property like this and it's got a flat at the bottom, well, there's my half. That. This is the property that I was at. It's like this. There's a fishing pond. There's deer. It's. I don't know what the end solution is going to be, but it is. It belongs to God and nature. So maybe it becomes a charity donation. I don't know. I have to have a really good year so that I can do that. Um, because it's 6 figures. Yeah.
woo,
So,
I've
and that was bought with somebody who is long experienced and a coach in one of the oldest uh, uh, guru schools, one of the originals. Right? I did 13 deals with this guy, made money on 12 out of 13. Right? My batting average is like 900. I'm batting 900. Right? But $130,000 eats up a lot of other at bats, right?
yeah.
Yeah. So slow, right? And you want to guess what the next obvious one is?
Flood zone.
You bet. Is it wet? Right?
Yeah.
You you can't fix nature. I can fix. I love bad title issues. I love errors, and I love paper problems.
Easy.
I know that I knew how to do before I got here, right? So paper problems are good for me. Um, but if it's wet, then then you got a problem. I had another property that I looked at that was 50% buildable. So again, a price report. No disrespect for the people at Price. I think they really do solid work. But the property was 50% buildable. It was also 50% wet. The wet buildable part. The other part was a hillside. So I got nothing. I got nothing, right? But I have houses on either side in a $600,000 home community. Why didn't somebody build on that lot 30 years ago?
I That is a valid question. I learned this very early on in my career. One of my first land deals. So I lived in an area, and I was just driving around, driving for dollars. That was the thing to do back then. And I found like 3 or 4 vacant lots. I'm like, why did nobody build on it? So I found the seller. I contracted it and everything, and there was a creek running right through the property, and that's why he didn't build on it.
Mhm.
He couldn't give those away.
Yeah, yeah. No, until you find somebody like me. Um, but again, there's been this. I don't know if the number of people doing this have tripled since I started 4 years ago.
I'm
It
sure.
feels like it.
Yeah, I'm sure.
It feels like it. And so the party's not over, but the market is perfecting. Margins are getting tighter. Sellers are we now again when you have 600 recorded transactions, you get a lot of offers, right? We get junk mail like crazy, right? Right? And I mean stacks and stacks. Um, and they're letters produced by Rocket Mail, and some of them was like, oh, that's the Land Academy forum, oh, that's the Land Investors Online forum, that's and you can tell what schools they're coming from because it's the same. You get the same letter 5 times, right? And somebody may pay up and put a color logo in one. Um, yeah, I, but I've got somebody making cold calls right now. We're calling a tax deed list or a tax delinquent list, but I'm looking for a specific size and shape
Mhm.
property. I'm looking for boring squares with good road access, all the what does Land Academy teach? They teach their 6 A's, access, all these their rules that they teach. They're all absolutely valid. You um, I look for me. And I look for me. Give me an old couple who's owned a property for a long time, you know, and I want to know what they planned on doing, and then why didn't that work? And then would you like to see that happen? Would you like to see that happen? You So, so we're like I said, I started a couple mobile home. I have to stop saying it. They're beautiful houses, 1,600 square foot manufactured homes. Cavco, which is like a Clayton uh,
Hmm.
uh, upgraded fits and finishes, double insulated. These are in Arizona, double insulated, double eaves. Just they're we would all be happy there, right? Um, because I think I think we know Californians are continuing to migrate to Arizona to get away from taxes and uh, and and cash out their house.
Yeah,
So you see,
they could be California rich in Arizona.
that's right. And these are near Kingman, and there's nothing wrong with the town of Kingman. Kingman's boring. Got a big hospital. Uh, that's what us old folks want. I just want to know if there's if there's is there a park to walk my dog, and is there a hospital where I fall down? You know,
Nearby.
I've had three I've had three mini strokes. I've had three TIAs.
Oh my goodness.
I've been on the floor. I've been on the ground. That's weird. I'm a stage 4 cancer survivor. I mean, something's gonna get me. I mean, people ask me. I say I'm a cockroach. You can't kill me.
I'm not going to comment on this. I'm going to keep it moving.
Yeah. So there you go. But,
So,
what else did I want to talk about? I want to talk about joint ventures. Where'd you go?
I'm right here. I'm right here. I'm here.
What did I do? I touched my screen.
You did
Go
something.
away. Oh, there you are. Oh, I put my keyboard. I put my pad of paper on the. See, I'm old. I still use paper. So, uh, the so there's lots of folks offering joint ventures.
Hmm.
Um, I was late getting on the call because I was talking to somebody that I had turned down, somebody that was new. He had a property for $90,000. He wanted $90,000. He had a realtor told him that he could sell it for 150, and or no, 150 to 175, and he could sell it fast. And that's what a realtor is supposed to tell you, right? And I happened last week to be driving through Chattanooga, right? And I went and looked. I was looking at mistakes that I'd made in Chattanooga, right? And I went and drove down this little dirt road and looked at this property. And while at the end of the dirt road were really, really nice houses on big flat lots, so your comps were it was absolutely you're going to do a desktop evaluation. This is he said the right things. He said there'll be a $500,000 house there. I said good, but when you're on the street and you can do this with your little Google map and you look around and there's the junkyard across the way, there's two single wides, there's weeds all over creation. From in front of the house, you can't see more than 10 feet in, and then it's just a wall of trees. Right. So, the cost of clearing and engineering and there's a little, well, it will perk. It did perk. There's a little stream and there's a look like you can see if there's weeds and grass growing, that means there's water underneath. Right. If there's trees, if there's just trees, there's no water. But if there's stuff, well, think about it. And I said, not only do I not like it because I've seen it, um, but I don't like it at the price point because it doesn't work for a builder.
Hmm.
So if it was at the end of the street in the nice place, and the house was a $500,000 on 11 acres, well, the builder needs to buy that lot for 50.
Yeah.
Right? He can't buy it for 150.
Yeah.
right? So now suddenly your buyer pool is cut in half. Nobody's going to do a spec build, and so like you're paying retail. And I said, please call me back in a year and tell me how it turned out.
I'm curious.
Yeah, I mean, as we've gone back and looked. We've gone back and looked at our denied deals, and looked at them 6 months later to see what happened. And more than half of them haven't traded. Right? So I'm not the only person turning stuff down, or they're buying it and it's not selling. Right? So but um, so we funded, I think, over 100, maybe it's like 100 different people, and the 80-20 rule applies. There's 20, 30 of those 100 that really know what they're doing. Many of them have gone on to become funders and podcasters and school doers and all the stuff you guys do. you know, but um, it's still it's we offered we when I bought I bought collection agencies in 1989. I bought market share by discounting. Right? So I just offered lower prices to lower contingency prices to hospitals and stuff. Um, so I did the same thing when we came in here, and I offered 80-20 splits. So everything was 50-50.
Yeah.
Yeah. So I came in and offered 80-20, and I was full. I had all my money out and nothing flat. But So we do if you can if it's a fast flip, you get 80%, and each month it goes up 10% until you get to 50-50. So you've got 4 month runway to get the better half of the deal. And overall, we've been at about a 2/3, 1/3 split, with 2/3 in the partner favor. And I thought 50-50 money was too expensive. Money only has so much value.
Yeah.
And I thought 50-50 was, but it depends on the product. If we're doing stuff that's going to take a long time, well, 50-50 is that my money's I can't use it. We're
Parked.
So we try to, if we turn the capital if we can turn the capital 2+ times a year, 2 and change is what we've been doing. It's we're okay. Everybody's I'm not driving a Lamborghini like some of the other people I know. I haven't gone out and bought a new, what did he buy? He bought a new Lotus, and then the most expensive Ford F whatever you can get, and he's posting all over, like look at me in my Corvette at the car show, and I don't care. I got a 20-year-old Lexus in the driveway. I'm very happy.
Gets me to the grocery store and back, and that's all that matters.
Yeah.
And to the hospital if I need it.
And to the hospital. Yeah, I just need to get to the hospital. I have a very dear friend who's the smartest guy I know, and he says, and there's three things. Bill says you're an investor, you're a speculator, or you're a gambler. And when you think you're investing, you're probably speculating. And when you think you're speculating, you're probably gambling. And then he says, and I'm a terrible gambler. Right? So we all say that we're land investors. We are absolutely land speculators. We are making a bet on a deal. And those are Las Vegas terms, right?
Yeah.
Right? So to say we're investing, the investor is the guy who buys something and says, I'm done now. Right? When are you going to sell? When I die.
Yeah.
Right? And I have a couple of houses that are that way, and I got some stuff that's that I'm not going to use. It's when I die. What have I borrowed against it? You know.
I'm
I used to keep a free and clear house in Florida, just to use for collateral.
collateralization. Yeah.
Yeah, just cross collateralized loans with builder finance when we were doing house construction. Yeah. And house construction's fun.
Um, what does I feel like a lot of investors in general. I know we're using. I like the term speculator because I think 100% we are speculators and we do take L's, especially as land flippers because we're speculating on the price. I like that term. I'm gonna use that from you. But I see a lot of investors, they transition over time like to more of a passive role versus active, and you are one of the few that have not done that. You still seem very active. You're active and passive, but you have like
I've swung too far the other way.
yeah, like I
And
think it's just it's weird to me. I'm trying to figure that out.
it's so the other part is I make emotional decisions. We all make emotional decisions. We don't make quantitative, measured decisions. We make emotional decisions. Um, some of us don't. I unfortunately do. I like whatever half of your brain that is. That's the only half I have. And I'm glad you think I'm funny. Uh, so I've gone too far in the minutia and all the little deals, and I've everywhere all the time at once. And this, like I said, I did this kind of reckoning 11-day trip around the United States, and it's like, okay, where should I be playing, and what should I be playing? You know, and and the Desert Square thing is the Desert Square thing. Um, little box. I don't ever touch it. I don't ever touch my medical loans anymore. Right? I've got a little machine built to take care of that, and that's investing. I'm building a business that is self perpetuating, right? And spins off a little bit for me. But the I think the value play for me is pretty easy to figure out. Tertiary markets, decent economies, po- poverty rate less poverty rate less than, say, 16, 15%, right? Where a house is $400,000. So middle America, Tennessee, North Carolina, South Carolina, Texas, rural parts of Arizona, eastern side of California, because I'm in California and I can't throw away 30-year relationships, right? I'm funding. But you're in SoCal, right?
Mhm.
Okay. I'm buying 2 lots in Homeland right now. Right? I just sold a manufactured home in what was it? Paris. It's this is people say California is not affordable. $200,000 get you a house and a quarter acre. Condition of the house, that's $200,000. 40-year-old manufactured home.
Yeah,
That same property in Alabama would be 15,000.
yeah.
Right. I just did a lot split in Iva, um, South Carolina, which is halfway between Chattanooga and Augusta, and there's nothing there. There's nothing there. We sold 58 acres to two developers, and they've owned the manufactured home lots across the street, right? And they're cutting it up in 1 acre parcels, putting houses on it, and so that got me to go, yeah, I want this. And what I've got it left is one 10-acre parcel with a 50-year-old house. House has been house needs some stuff. So my partner says, just sell it as is. And I come from houses. For a little bit of time I had a real estate license. And so we're gonna spray it and clean it and put a new back porch on it and sell somebody a house for 250. 220. That's I like that. I like that. Okay, this is there's some meat on the bones for everybody, and I'm taking somebody out of a mobile home park and giving them a house with some acreage for them to raise their kids. Yay. You know, and so I'm trying to do, trying to I was going to say I was trying to do good. I'm trying not to hurt anybody. I'm not even going to give myself like I'm trying to do a good deed. I'm just trying to make sure I don't hurt anybody. I don't want to sell. I don't want to sell anybody something that they can't use, or you know, the people that we talk to that we buy from are selling their problems, right? And we're trying to be problem solvers, but sometimes the person on the other side isn't being honest.
Yeah.
Not everybody has a strong moral compass. They have a problem and they're desperate and they want to get rid of it. And we were stupid enough to send them a letter, and there you go.
I think there's a thing where how I think you said you're going to donate some of your problems that you kind of bought on accident. How do you relinquish problems that you there's always a price for everything. Are you taking that loss, or are you selling the problem to somebody who's going to fix it?
Um,
Do you try and fix it? Like,
my partner says that there's a price for everything. He says there's a price for everything.
yeah,
He says, and buy it at a price where you can't get hurt. You can still get hurt. Uh, you can still get hurt. And am I selling stuff at a loss once in a while? When we make an egregious mistake, yeah, that I can't fix, and that time isn't going to fix.
yeah,
If time's not going to fix it, then just eat what we can based on what our P&L says we can do. Back in the crash, we were looking at we're looking at all these zombie foreclosures, they called them, where there were people living in a house and not paying their mortgage payments,
yep,
and the bank couldn't take it back because it was in violation of their charter and the federal rules. If the banks had repossessed everything that was out there, the banks would have all gone out of business because they wouldn't have been allowed to operate.
yeah.
So I've got a balance sheet with however many millions of dollars of paper of real estate on it, and some of it I have to wait for. Right? So, but so I'm taking off my worst ones first. That big property. And like I said, I couldn't figure out how to get down the hill. Yeah,
A big ramp.
yeah, right. Yeah, and I'm fairly healthy. I go to the gym. Yeah. But so some stuff has to go. Some stuff um, I've got things that I've sold on terms to kind of like push the loss out there in the future. So it's um, yeah. Like I said, if we're batting 900 and I can name most of my current problems, I think I'm doing okay. I mean, property comes and goes that I never even looked at.
Yeah,
I mean, when I underwrite, I'm basically underwriting my underwriter and looking for the qualitative things that matter to me. I can't. I'm trying to figure out how to teach slope better because I didn't know it. I didn't know that when I started talking about, it, I was all in for that because I had done a bunch of other deals with this partner and figured that he knew what he was doing. The agent drove by and then did a desktop evaluation and said, "This is what price per acre is. Yeah, you'll be good." Why did he not stop? Because there was no place to park. And this is a very successful, experienced whitetail agent. Right? I was in Buffalo the 24th, 25th, and walked property with a guy that I'm shopping Western New York. If I have to pick one market, I'm shopping Western New York because of that guy. You know, I'm I he's he knows way more than I do, and he's got decades of experience, and he's, and I, yeah, Paul Vaikunas. Yeah. And we bought, what did we bought? We bought a wet 13 acre, 17 acre. He sold that for 10,000 an acre. We bought 20-acre hayfield, cut it up as much as the city would allow, and it's going to be a double. We're going to double our money, and I'm going to go see if I can go let them have me cut it up a little bit more. But we cut 20 acres into 5 parcels, and I think maybe they'll let me cut the last piece, and I have a 13-acre piece, and so it's a square, it's a rectangle. I put 4 lots in the front, and then there's an L around it, with the intent of, well, I got this one end on the street, and I have another street access. Would you let me cut this big piece into 4 pieces?
Yeah.
But it's and when we did that, like I said, even though I've got, what did we figure out? I figured out how many. I've got 130. Yeah, I have 100. Yeah, I have 139 properties in the desert right now. Right? And I'll tell you, I like trees.
Yeah.
So, I check in a year and see if I'm buying more trees than sand. I own a lot of rocks and sand right now. But every one of them, I understand, has reasonable access.
Reasonable access is important.
Yeah, and the 2 manufactured homes, I own 6 lots within a mile. So I'm trying to make a neighborhood.
Yeah, at that rate, yeah.
Yeah.
You already have land.
We're paying to pull power a quarter mile. $25 a foot, a quarter mile, right? And my partner Nick is,
30,000.
is just like shaking his head, going, "What are you doing?" And we'll find out.
It makes sense after the third one.
That's right. That's exactly right. You got it. Then the last 3 are going to be Golden, and it's in Golden Valley. The last 3, but once I start, then and I get proof of concept, I sell 2. I can pay the neighbors more for their property than I could have today.
Yeah, because you already did all the extra work that needed to get it more valuable anyway.
Yeah.
Or you can buy it cheaper at the same price, and now you have a value add because you bought it cheaper because you added that value by putting in the electrical.
So yes, I'm in too many places doing too many things, and that meeting starts at 1 o'clock. To say we're too busy working in transactions to work on processes and making a better business. And so that's what we got to do now, because I'm doing clerical function stuff, and I'm the worst clerk in the company. Anyway.
So with all those mistakes and the I think the good you've done, I think you're an ethical lender to try and reperform the performing and not performing. What does legacy and how is all this stuff going to transition?
So it's my partner will take over the business at any time I'm ready. And like I said, I'm 69, so it's really on my mind. But I'm way better at this than I am at golf.
Yeah.
Right. And one of our company questions was today more fun than golf? And so some days lately it has not been. So that's the thing we got to fix. I love doing deals. I love, obviously I love talking, and I like making wins. I love coaching. I just, I'm just, My partner is 36. Um, I got a couple other teammates that I'm been working with. Like I said, I've started a cold caller who's a 10-year real estate veteran, and she's somebody that I funded a couple of flips and rentals for, and she's just a soldier. And so she said she wanted to try her hand at it, and so I'm getting to teach cold calling again. I mean, I was taught cold calling. Oh God, you know, um, yeah. But it's so I like being. It's most of my days. I don't have a job. I'm playing. Right. I mean, this is fun. This is you see folks sitting doing Sudoku or crossword puzzles. It's that part of my brain. So I'm much happier doing this than sitting. If I took this away, I'd be doing Rotary projects all the time. I've been a Rotarian for a long time. I'd be off in someplace in Africa giving people polio vaccines. And this is something that I actually know something about. So I might as well do that.
Yeah. What's a quote that is yours, somebody else's that you resonate with?
Wait, what's a quote? What?
What is a quote that is yours or somebody else's that you resonate with?
That we what with? I'm sorry.
Resonate. You
Oh,
resonate.
resonate. Well, the investing, speculating, gambling one. And would you sign the contract that you're handing someone else?
That's a hard one.
Right? Right? Would you sign the contract that you're giving someone else?
Depends what it's for.
Well, then there's some. Well, I'm glad I had something to think about. I bought a payday loan store so that I could take the payday lenders, the payday borrowers, and turn them into installment loans. They didn't need a $250 loan. They needed a $2,000 loan to get out of their problems. Right? They didn't need a $200 2-week loan that they came back every 2 weeks and renewed.
Yeah.
That was too far down the credit spectrum. Those are people that needed more help than I was able to give them. Right?
Yeah.
But I mean, I'm writing payday loans, and Saturday mornings I'm doing a finance class in the office. That was you get a rebate on your check cashing fee if you come to the class to learn how to stop coming to my class. Stop coming to me.
Every Thursday.
Yeah,
Every
yeah,
Friday.
yeah, and I've been doing I've been doing I've been doing financial education for decades, and nobody listens.
There's always more people more people show up next week too.
Yeah, that's right. Yeah, but so playing in RIA groups and hanging out. Do I want to hang out with country club people or people in a RIA? I want to be in a RIA meeting.
It's where the real people are at.
Yeah, I want to be with my kind. Yeah. So,
It's a very interesting perspective. I think your credit experience is it's unique. I've never heard anybody have that much unique experiences with subprime borrowers and what you're doing for them. That's pretty amazing.
well, and I've I had thought several times that I ought to take what I know, and it's now a web-based process that we use, and pivot it to do underwriting and land, and it just a few years ago I talked about it to some land geek folks, and it was like, nah, we're okay doing the repossessions, it's fine. And it's just like I said, what did I say? The tenant always looks like the property, right? Tenant always looks like the property. The inside of the house always looks like the mortgage. It looks like the mortgage payments, and so people buying $1,000 desert square. They don't have much to lose.
Yeah, yeah, that's for sure.
Yeah.
Where can people find you online? I got financelandsales.com.
Yep.
People are looking to partner with you.
Yeah.
Where else can people find you online?
Yeah. Nowhere. I've got an unused little YouTube channel that maybe I'll cut some of this up and put it up there, called Real Estate for Us.
Real estate for us.
And Real Estate for Us with a number 4. Years ago, I started when this was all started. I was doing my little group would get together and we would just record our what was going on. But I'm in Discord groups. What am I? I'm in Land Investors Online, Land Academy. But no, if you want money, go to financelandsales.com. There's a form. I said, but half the time we say yes, and if we say no, we're not in the business of saying no.
Yeah.
It's that it's that we think there's a problem. And I'm not buying any hillsides anymore.
Ditches, creeks.
Yeah, right. Yeah, I got 20 acres in Texas that access got wiped out in a hurricane. I need to build a bridge.
Bridges are expensive.
Yeah, so that's one of the ones that sits. I haven't solved that one yet.
Thank you for coming. For everybody here, go like, share, subscribe. Thank you, Steve.
Okay.
Everybody, we'll see you next time.
Okay. All right. Thanks for the time, Daniel.
Bye.